Kindly subscribe to our YouTube channel to watch the full lecture. Hello everyone, welcome to my YouTube channel. In today's video, let us see a 12 mark or 14 mark problem in which we need to prepare the journal entries also. Then we need to prepare the balance sheet also. So now the question is on the screen. Following is the balance sheet of U Limited as on 31st March 2022. So they have given a balance sheet as on 31st March 2022. So in that they have given liabilities and assets. So we know that. Now let us see the more additional information what they have given. The following scheme of reconstruction was approved. So the company adopted the following scheme of internal reconstruction. A fixed assets are to be written down by 33.33 percentage. So fixed assets value we need to reduce. Then current assets are to be revalued at rupees 27 lakh. So in balance sheet, if you observe, the current assets value is rupees 35 lakh, but it has been reduced to 27 lakhs. Preference shareholders decide to forego their right to arrears of dividend, which are in arrears for 3 years. So 13% is the what you say the dividend for this cumulative preference shareholders. So in that 33 percent 13%, sorry, so 13% is there, and they have an arrears due for 3 years. So that 3 years they are sacrificing. Next, the tax liability is settled at rupees 4 lakh. So in balance sheet, if you see, the tax provision is 3 lakh, but now it has been settled overall for 4 lakh. So it is settled completely. Next, one of the creditors of the company to whom the company owes rupees 25 lakh decide to forego 50% of his claim. He is allotted 1 lakh equity shares of rupees 5 each in part satisfaction of the balance of his claim. So out of 25 lakhs, 50% is foregone. Okay, 15% is sacrificed. So that 50% we need to transfer it to capital reduction account. Then apart from that, he is allotted an equity shares of rupees 5 each. So 1 lakh equity shares of rupees 5 each. The rate of interest on debentures is increased to 11%. So the rate of interest on debentures here, 8% debentures is there in question. That 8% debentures have been increased to 11% debentures. The debenture holders surrender their existing debentures of rupees 100 each and exchange the same for fresh debentures of rupees 75 each. So that 100 rupees each debentures, what it was their current debentures, is been converted into 75 rupees each. All existing equity shares are to be reduced to rupees 5 each. So 10 rupees was the equity shares value, that we need to reduce to 5 rupees. All preference shares are reduced to 75. So in question, preference share is 100 rupees. We have to reduce it to 75 rupees. Now see here, let us see what they have given. First, let us see about equity shares. So in this equity shares in question, what they have given in balance sheet, there are total rupees 10 value equity shares, okay, which is amounting to rupees 7 lakh. That means 70,000 equity shares were there, and each share value is rupees 10. So the value is 7 lakh. Now this is being converted into 5 rupees. So this 10 rupees, we need to convert it into 5 rupees. So 70,000 into 5, it will be 3,50,000. So for this we need to pass the first journal entry. Second journal entry we need to pass for the preference shares. They have told that all preference shares are reduced to rupees 75 each. So the value of preference, first let me write preference shares. So there were 1 lakh preference shares and each value was rupees 100, which means 1000 preference shares were there. Each value is 100. So we had 1 lakh. Now this 100 has been converted into 75. So it becomes 1000 preference shares into 75, that is 75,000. This is the second journal entry we need to pass. The third journal entry, what they have told is that here, one of the creditors of the company to whom the company owes 25 lakh. So 25 lakh, this is nothing but the sundry creditors. Okay. In this 50% and the ardhadashtu. So 50% of 25 lakh is nothing but 12 lakh 50,000. This has been sacrificed. So this has been forgone means sacrificed. Then for the same sundry creditors, they are issuing equity shares. So they are issuing total 1 lakh equity shares of rupees 5 each. So they are even giving the equity shares for this sundry creditors, that is 5 lakh. This is the third journal entry we need to pass. The fourth journal entry what we need to pass is the debentures. So what they have told that debentures, in question we have 8% debentures, that is 3 lakh rupees. This 8% debentures have been converted into 11% debentures. Okay, the 11% debentures will have, so this 3 lakh debentures, debenture holders was of rupees 100 each, which means they had issued only 3000 debentures. So now for the same 3000 debentures holders, they have been converting it into 75 rupees. So it was 100 rupees. So that 100 rupees they are converting it into 75 rupees. So 3000 into 75, it will be 2,25,000. So the 3 lakh value they are converting it into 2,25,000. This is the fourth journal entry. Fifth journal entry, we need to write off the losses. Whatever the losses is there, we need to write off. First, let us prepare these 5 journal entries. Then later on, we can prepare the balance sheet. First journal entry we need to prepare for converting this equity shares, that is of rupees 10 each into rupees 5 each. Let us see how to pass the entry for this. So first will be equity share capital account, equity share capital account. This is old one. So total 70,000 shares into 10 each, nothing but 7 lakh. That we need to convert it into 5 rupees. So to equity share capital account, this is a new issue, new share account. So same 70,000 equity shares has been reduced to 5 rupees. So here you will get 3,50,000. So whatever the balance is there, that we need to transfer it into capital reduction account. ಏನೇ ಒಂದು balance ಇತ್ತು. So here balance is how much? 7 lakh minus here 3,50,000. So the balance is 3,50,000. That is a capital reduction account because that is a sacrifice the equity shareholders have made. So the narration will be being 70,000 equity shares of rupees 10 each converted into rupees 5 each. So 10 each is converted into rupees 5 each. This is the first journal entry. Now the second journal entry we need to pass for the preference shares. So 100 rupees preference shares have been converted into 75 rupees. So it will be preference share. So in balance sheet is 13% preference shares capital account. This is the old. How much? Total 1000 preference shares were there and each share value was rupees 100. So 1 lakh is converted into 11%, sorry, it is same 13% preference share capital account. So now instead of 100 rupees ಅದನ್ನ ನಾವು 75 rupeesಗೆ ಇಶ್ಯೂ ಮಾಡ್ತಾ ಇದ್ದೀವಿ. ಎಷ್ಟಾಗುತ್ತೆ ಆವಾಗ? It becomes 75,000. ವಾಟ್ ಎವರ್ ದ ಬ್ಯಾಲೆನ್ಸ್ ಏನೇ ಇದ್ರೂ ಅದನ್ನು ಕ್ಯಾಪಿಟಲ್ ರಿಡಕ್ಷನ್ ಅಕೌಂಟಿಗೆ ಟ್ರಾನ್ಸ್ಫರ್ ಮಾಡಬೇಕು, ಟು ಕ್ಯಾಪಿಟಲ್ ರಿಡಕ್ಷನ್ ಅಕೌಂಟ್. ಸೊ 1 lakh minus 75,000, it is nothing but 25,000. So the narration you can write it simple, being 13% cumulative preference shares converted. So this is the second entry. Now the third entry is the sundry creditors. So 25 lakhs, in that 50% of 25 lakh is 12,50,000 has been sacrificed. So the sacrificed amount we need to transfer it into capital reduction account. Then for them we are issuing equity shares, that is 1 lakh equity shares of 5 rupees, which is nothing but 5 lakh. So here it will be current liabilities. That is sundry creditors. So we don't know the value, actually leave it off. For them we are issuing first what? Equity shares we are issuing. So total we are issuing 1 lakh equity shares of rupees 5. So here it will be 5 lakh. Then they are sacrificing 50%. So whatever the sacrifice is there, that we need to show it under capital reduction account. So that's it, nothing but 25 lakh into 50%. So 50% of 25 lakh is 12,50,000. So 12,50,000 plus 5 lakh is 17,50,000. This is the sundry creditors liability. So the narration will be being 50% of claim foregone. So they are sacrificing the 50% of the claim. This is the third journal entry. Fourth one, what they have told, 8% debentures we have to convert it into 11% debentures. So 8% debentures value was 100 rupees. Now we need to convert this 8% debentures into 11% debentures of rupees 75 each. So here it will be 8% debentures account, that is total 3,000 debentures, and it had a value of rupees 100 each. So it will be 3 lakh. That has been converted into 11% debentures of rupees 75 each. So 75 each means it will be 2,25,000. The remaining balance we need to transfer it into capital reduction account. That is 3 lakh minus 2,25,000, which is nothing but 75,000. So here the narration will be being debentures converted. This is the fourth entry. Now the last entry is we need to adjust the capital reduction account. So right here, capital reduction account debtor. So see here, first capital reduction account, it is 3,50,000 plus here we have 25,000 plus we have 12,50,000 plus here we have 75,000. Now add all those. So you need to add 3,50,000 plus 25,000 plus 12,50,000 plus 75,000. Add all this, 3,50,000 plus 25,000 plus 12,50,000 plus 75,000. We will get 17 lakh. Now we need to adjust all the losses. So first what they have told that the fixed assets are written down by 33.33%. So fixed assets to fixed assets. So 15 lakh into 33.333, you can take 334 percentage, you will get 5 lakh. Next we have what I told, current assets. Current assets are revalued at 27 lakh. So in balance sheet the current assets is 35 lakh. Now the value is 27 lakh. So minus 35 lakh and 27 lakh, you will get, that is 8 lakh. Next we have tax liabilities settled at 4 lakh. So to provision for taxation, it has been settled at 4 lakh. So 4 lakh we have settled, but in balance sheet it is 3 lakh. So minus 4 lakh and 3 lakh, you will get 1 lakh. Then here we have profit and loss account. So that also we need to write off. To P&L account, it is 3 lakh. Now from this 17 lakh, subtract 5 lakh, then subtract 8 lakh, then subtract 1 lakh, then subtract 3 lakh. So there is no balancing figure. So here capital reserve account will not come, because when you add all this, it will be equal to this 17 lakh. So narration will be being capital reduction account adjusted. So this is how we need to pass the journal entries. Now let us see how to prepare the balance sheet. So while preparing a balance sheet, we need to follow this format. First we should write equity and liabilities. Modlo equity and liabilities. So equity ali first ಏನು ಬರುತ್ತೆ, share capital ಬರುತ್ತೆ. So in this share capital, first we have, that is 8C here. Here we are having 13% preference shares. So 13% preference share capital we have, that is 75,000, that we need to write. So 13% cumulative preference shares, that is 75,000 rupees is there. Next let us see how much we have. Equity share capital, see here in the first entry we are converting it into 5 rupees. So here we have 3,50,000. Next here again we are issuing the equity shares of rupees 1 lakh into 5, so 5 lakh. So 5 lakh plus 3,50,000, it will be 8,50,000. 8,50,000. Next what it comes, reserves and surplus. Under reserves and surplus, capital reserve come, but in this problem we don't have any capital reserve, so leave it as it is. Next comes non-current liabilities. So in question, do we have any non-current liabilities? Yes, we have non-current liabilities, that is 11% debentures. 11% debentures, see here 11% debentures, the value is 2,25,000, that we need to write it here, 2,25,000. Next nothing we have. Next comes current liabilities. Under current liabilities we have current liabilities. So in the balance sheet it was actually 39 lakh, but if you see the journal entry, here we are already settled 17,50,000, so that we need to minus here. Then we have provision for taxes. Provision for taxes that in question they have given, that is 4 lakh. So we have settled here 17 lakhs 50,000. That if you minus, you will get 21 lakh 50,000. Next in adjustment they are told that tax liability is settled. So the provision for taxes we have settled, that is 4 lakh rupees. Now add all this. Add 75,000 plus 8 lakh 50,000 plus 2 lakh 25,000 plus 21 lakh 50,000 plus 4 lakh. You will get 37 lakh. This 37 lakh is total liabilities, liability side. Next, we need to take the second thing, that is assets. So first always we will take non-current assets. Non-current assets. Under non-current assets, first we will have fixed assets. The fixed assets value in balance sheet is 15 lakh, but we have reduced 5 lakh in the journal entry. See here, we have reduced here 5 lakh rupees we have reduced, so that we have to minus. So it will be 10 lakh. Next we have current assets heading. Under that current assets in the balance sheet it is 35 lakhs. Okay, now they have told that this 35 lakhs has been valued at rupees 27 lakhs. So the 27 lakhs, write it directly. Now add 27 lakhs plus 10 lakh, it will be 37 lakhs. This is total of the asset side. So our balance sheet got tallied. This is how we need to solve this problem. Hope you have understood how to prepare the journal entries, that is the first part, and how to prepare the new balance sheet. If you have any queries while solving, please put your queries in the comment box so that we will respond to your comments as soon as possible. Please practice this video once again and study well for your examination. I'll come back with the next video. Thank you. If you have any queries regarding today's session, kindly send your queries to education.mbroadcast@gmail.com.